Hello there, you're watching Kalkine TV and I'm Rachel. This is the Buzzing Trends Show. Today we'll take a look at the much anticipated Reserve Bank of Australia meeting from yesterday, where they decided to keep interest rates unchanged at 0.1%. in the hope that this is going to aid Australia's economic recovery. Next, we'll look at the change in consumer behaviour across Europe and how it's slowing down the pace of economic recovery. Then I'll take a look at the stock prices of Tencent and Netease as they plunged on the Hang Seng Tech Index. So first off, Australia's Reserve Bank surprised markets by sticking with plans to taper bond buying, citing that the economy will rebound once coronavirus lockdowns ease. Industry experts had expected the central bank to defer the tapering given lockdowns in major cities. The Reserve Bank of Australia has kept its cash rate consistent at 0.1% continually for the last 8 sessions. That's as expected by the market. Another announcement the RBA made during the meeting was about not changing interest rates till the inflation came down to 2 to 3%, something which will be difficult to attain at any time before 2024. The RBA also surprised the markets with the decision to cut down on government bond purchases by bringing it down to $4 billion a week from September onwards. That's retracting from its earlier purchases of $5 billion, which the markets were hoping for. The RBA to continue with the same levels. Following the RBA meeting, the Australian dollar touched the day's high of 74 cents. That's after the meeting. RBA Governor Philip Lowe praised the Australian economy for its resilience that it was showing in the face of the coronavirus pandemic-led recession. Posting economic recovery was beating expectations. Moving on to European shores now, economists are expressing concern over the pace of the economic recovery over there, pointing to a change of behaviour in consumers compared to last year's lockdown. This is making the road to recovery more difficult than was previously anticipated. European consumers are more inclined to save money due to fear surrounding the Delta strain of the COVID pandemic. This year's consumer behaviour is different to how consumers behaved last year, which was positively driven in regards to the population resuming their lives as normal once the first of lockdowns were lifted. However, that story is progressing now towards a different twist connecting to economic recovery, with the road to recovery strewn with challenges ahead. As the pandemic has been more continuing now for over 18 months, consumers are taking discretionary spending more seriously than before. The trends seen in the UK indicate the recent surge in cases is slowing down the pace of economic activity as people are quite hesitant to step out of their homes. As a result, analysts have lowered their estimates for UK growth. The same trend is prevalent across the rest of Europe, with the real GDP staying below analysts' expectations, keeping the overall situation volatile at this moment. Moving forward, the momentum of recovery is going to be slow, as other factors contributing to this include supply chain problems faced by all manufacturers. Let's take a very small break now, but stay tuned with Kalkine TV.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Monday on the Tech Beat, exclusive to Kalkine TV.
Hello, welcome back. I'm Rachel and you're watching The Buzzing Trends. Up next is the story of how Chinese online gaming stocks witnessed a sharp offloading by investors after online gaming was called addictive by Chinese state media. They drew parallels between online gaming and opium. causing the shares for Tencent and Netease to take a beating, with Tencent shares plunging as much as 6% and Netease shares down 8% in the aftermath. The Hang Seng Tech Index was down 1.47% at the close. Chinese media also call for restrictions on online gaming due to its damaging effects on children, such as nearsightedness, as well as taking their attention away from their education. The article reported as many as 50% of children were grappling with the harmful impacts of online gaming. This sentiment was expressed by Chinese media, and it's not new. The Chinese government has been concerned about the impact of online games on youngsters for some time now. Back in 2018, Beijing took measures such as not granting approvals for any new games and also banned those under the age of 18 from playing online games between 10 p.m. and 8 a.m. and imposed restrictions on the number of hours children can play online games for. Well, it's time to wrap up today's show. I hope you found it informative. Stay tuned for more news and updates on Kalkine TV Live. I'm Rachel, signing off for now.